Hello everyone, welcome back. Today, I will be talking about perhaps the most overvalued stock currently in the financial markets. So, let's begin. The stock that I will be talking about today is none other than Tesla. It is currently the 12th largest company in the world and is the most hottest electrical vehicle stock player out there, with an upward performance of 41% in the month, 90% in the 3-month chart, and over 500% on the yearly chart. But I strongly believe that Tesla may be the most overvalued company ever recorded in history. Let me show you why. To justify a company's evaluation, there are four main things I look at. One being revenue, two being gross profit, three being EBITDA, and four being forward PE. So let's first start with revenue. So in comparison, for the other big market cap companies being at an valuation of between 220 and 230 billion, we can see that the revenue for Tesla has been significantly lower in comparison to the three biggest other stocks in the company at that time. So when Amazon had a valuation of between 220 and 230 billion, their price to sales was 2.4 with a revenue of 95.8 billion, which is 2.69 times bigger than what Tesla had. So as we can clearly see, they're lagging on sectors like tech and commerce, even though they have much more potential of growth in comparison to an automotive industry like Tesla. Next, we have gross profits. So the gross profit margin and gross profits are two significant numbers in order to determine cash flow from a company. So for example, when Microsoft had a $220 billion valuation, they had 10 times more gross profit than Tesla. Microsoft had $55 billion of profit when they had a market cap of between 220 and 230 billion compared to a measly 4.7 billion gross profit from Tesla. And what thing is also very important is to have a high gross margin. So if a company falters in a time of recession or in a time of pandemic like right now, we can see that Microsoft's margins are much higher than Tesla. Hence why the growth is so high for tech players. Next, this is the comparison of revenue and gross profit. Many people tell each other that Tesla has such a high valuation due to growth. Even though there's some growth, Tesla has been stagnant since quarter three in 2018 in terms of a revenue perspective. And in terms of profits and losses, it's all over the place. As you can see, there was a profit quarter three of 2016, which was bigger than quarter four of 2019. I see no growth in both earnings and revenue, which is quite surprising for a stock to be up 500% in 1 year. Another metric I use in order to determine a company's evaluation is their forward PE ratio. So let's compare the forward PE ratio of Tesla to other close market cap companies and other large cap market companies. So Tesla has a forward PE of around 370x, which is a lot because the forward PE is the current share price divided by the predicted future earnings. The predicted future earnings are $9 a share, and this past week they reported a $2 per share earnings. So they're expecting a 4.5x times earnings, and still their PE ratio is this high. So that's quite interesting for new investors who want to invest in Tesla. So let's compare that to other market cap companies. So Apple, as of today, as the current price, it's expecting a 24.45 forward PE ratio. Microsoft at around 31, Disney at 38, and Home Depot, which has almost the exact market cap, but more growth opportunities in terms of earnings and revenue, at 26.39. So every single company which has the top five biggest market caps all have forward PEs under 75. So what makes Tesla so special that they deserve a 370 forward PE? People say growth, but as you can clearly see, their earnings and profits have been pretty stagnant over the past couple of years. Personally, I'm not a fan of Tesla and will not be investing in Tesla stock anytime soon. In order for me to be a Tesla shareholder, the price has to drop around $900 at a reasonable price of $500 per share for Tesla. I believe due to their parabolic move of 500%, I believe Tesla stock will come crashing down within the next year or so to around $500 to $600 a share at a more justifiable valuation in comparison to their peers. With the current earnings of 270x, I believe that this stock may be the most overvalued stock in the large market cap industry in the financial market. There you have it, folks. I'm not a shareholder of Tesla, and I believe this may be the biggest fluke in terms of a large market cap company until they prove they have the potential to grab market share in unknown areas like self-driving or the electrical vehicle space or stuff like that. Thank you guys for watching. Please let me know what you think down in the comments and have a good day.